Thanks for watching Afternoon Live. If buying a home feels out of reach for you, our next guest joins us with an innovative way that could make owning a home a reality. We welcome the author of Bank on Your Neighbor, a people-first real estate strategy to build wealth together, Mel Dorman. Thank you so much for joining us.
Thank you so much, Hannah, for having me.
You're going to tell us a little bit about this concept of seller financing, which really could be a more realistic pathway to home ownership for a lot of people, right?
Yes, absolutely. It was the way that I got to be able to build my portfolio as well.
Can you tell us about what that means in terms of what a traditional bank financing looks like versus seller financing?
Yeah, so most people think you'd have to go to a bank in order to get a bank loan to buy a property. But seller financing is when you go straight to the seller. And as long as they have equity, they can lend to you directly. And you can pay them in installment payments over time.
I mean, it sounds so simple.
It is.
Okay. It can be, I think, if you
be.
kind of know what you're getting yourself into.
Yeah.
Okay, well, let's talk about some of the benefits of this. Like you said, someone who has equity, maybe they're ready for retirement, and this could be a stream of income for someone?
Yes, absolutely. So there are so many people out there that own their home outright, or maybe they've been landlords for a long time and they have a lot of equity. But they're trying to figure out, how am I going to retire? How am I going to move into this next phase of life? And seller financing allows them to turn their equity into an income stream.
Because basically, they're going to be collecting that interest instead of letting it go to the bank.
Absolutely. So they can make hundreds of thousands of dollars doing it this way.
And then you, as the buyer, you're keeping that wealth in your own community, potentially with a neighbor, depending on kind of the deal that you strike, right?
Absolutely. So instead of sending your mortgage payment to a big bank or financial institution, you're actually just sending it to your neighbor down the street. And it goes to funding their retirement or sending their kid to college.
So in terms of enticing sellers to take on this kind of a deal, there is some pretty good incentive for them, right? I mean, we mentioned they're going to collect that interest.
Yeah, not only do they make hundreds of thousands of dollars in bank interest, or interest that would have went to a bank goes to them, they also are able to defer the capital gains tax. So they're going to make interest on money that would have ordinarily went to taxes.
That's a big deal.
It is a big deal.
And you can put all this down on paper in a really you know, get attorney's help, whatever you need to make sure that you do have an ironclad agreement, but it can be between friends and neighbors.
Absolutely. So you can still use professionals. You can use a realtor, you can use an attorney to draft the paperwork, you use an escrow company and everything. It's a very professional process.
Okay. So I think the hardest part might be finding that seller, right, that's going to be willing to do this deal with you. How did you go about doing this the first time?
Oh, great question. It is the hardest part, is finding somebody you can build this partnership with, because you really need to have alignment on your goals. So there's lots of ways to do it. When I was first getting started, I would door knock on people's doors, I would cold call them, I would send them letters to try to introduce myself. And a combination of all those things, I found a lot of sellers willing to work with me.
Right. Well, and it sounds like you've got to kind of show up as the best version of yourself. So being a great member of your community, that might be a way to build your own equity that way, that people are willing to make that deal with you.
Absolutely. You know, it's a huge benefit to be able to bring this to your community members, and the most important part is you need to be a responsible person so you can fulfill on your promise to them.
Okay. I think a lot of people might be thinking, I'd like to sell property to my adult kids this way if they're in that life stage. Is this something that could be beneficial on both sides in that scenario?
Absolutely. So this allows, you know, millennials and Gen Z who really struggle to get into home ownership these days to really partner with somebody who's maybe a boomer looking to retire.
Right.
And together they can create a strategic partnership where both people win. The millennial and Gen Z person is able to get into home ownership, and the older folks are able to retire this way. So it's a really beautiful partnership.
So what do you say to people who say, that all sounds great, but how do I even come up with a down payment in the first place? Because that can be a huge barrier to owning a home in any scenario.
Absolutely. You know, interestingly enough, my first seller finance transaction, it only cost me $500 out of pocket.
Okay.
Because the cool thing about seller financing is everything is negotiable. And so you can negotiate the interest rate, the down payment, and how long the length of the term of the loan is as well.
Because I think I've heard a bit of this story where the initial number that was offered for you was nowhere near what you had on hand or were willing to pay. But through some back and forth, you guys found a mutually beneficial number, $500 out of pocket for you, that ended up being lucrative for everyone.
Yes, absolutely. You know, at first he wanted $75,000 down, but I didn't have that. So I just asked him, what would it cost for you to foreclose on me? And he was an attorney, so he told me it was $15,000 in Oregon, which is amazing. That's the risk for the seller. As long as they get more than $15,000, then they'll have money to foreclose if they need to.
Okay.
So the great thing is this seller allowed me to raise money with friends and family for the remainder of the down payment. So I only had to come up with $500 to buy that property.
That's not so bad. I think we could hopefully wrestle up 500
Yeah.
bucks. So let's say, I mean, everyone has the best intentions, but let's say you enter into an agreement and the buyer just isn't able to make the payments and it does turn sour. How do you move forward in that scenario?
Yes, so that could happen through a foreclosure process.
Right.
And while that sounds really big and scary, in Oregon it's only $15,000 and it takes about 6 months and with the help of an attorney. But the beautiful thing is between neighbors, you can also just create an agreement that works. So maybe for a time, if somebody lost their job, you could delay payments for a few months while they got their job, and you could avoid the foreclosure process altogether.
Well, and it makes sense too that if you've built a relationship with somebody and you trust them, hopefully you know that they're going to make good as soon as they can, because things come up and life happens.
Absolutely, but working together, we rebuild the social fabric and also the financial connections within our community that really strengthen us.
Okay, all great stuff. Thank you so much for sharing with us today.
Yeah, absolutely. Thanks for having me.
Great chatting with you. Okay, the book again is Bank on Your Neighbor. We'll have more information on our website at katu.com. We'll be right back with more Afternoon Live right after this.